Hi, everyone. It's Sid here from Fundamental Research. And our guest today is Marshall Koval, the CEO of Lumina Gold. Marshall is a geologist and has been in the business for over 40 years. And he's also director of Cangrejos Gold Corp. We've been covering Lumina for over 2 years now. And since then, its market cap has increased 90% to 334 million today. Lumina has a large gold deposit in Ecuador, and we believe it is one of the largest undeveloped deposits in the world, held by a junior. Ross Beaty owns 19.8% of the company. So the agenda for today is I'll kick off the call with our thoughts on gold, and Marshall will take over from there and talk to us about Lumina and its development plans. For listeners, you can either wait till the end to ask questions, or if you have questions during the presentation, feel free to type them in and we'll try to respond to them. Here are some key disclaimers. Please take a moment. So let's talk about gold. Prices are down 8% year over year. Gold and silver underperformed base metals, as you can see in the chart here. Now, we have 5 reasons to believe that gold will perform well for the next 3 to 4 months. This is a short-term outlook. The first point, I've shown the slide here shows the 5 points that I'm going to talk to you in a second. The first point is that interest rates are expected to stay low, as the US Fed has no intentions to raise rates this year. The Fed has also not given any clear timelines for tapering its bond purchases. And we know that gold's value proposition is higher when rates are low. The next point is higher inflation. Inflation in the US is expected to be higher than historical levels and also higher than other developed economies. The number one reason for inflation is a significant increase in money supply, which is up 30% relative to pre-pandemic levels. Now note that money supply and gold prices are positively correlated. The second reason for inflation is GDP growth. US GDP growth is expected to be 6.4% this year versus negative 3.5% last year. The third factor for gold is that demand from central banks picked up significantly in the first half of this year. Note that gold prices typically move with investment demand. This chart here shows the historical relationship. That past 16 years relationship between investment demand and gold prices, and you can see the correlation here. The fourth factor for gold is rising production costs. Notice the big jump in cost in Q1 and Q2 of this year. Our fifth and final point is that historically, gold prices tend to increase when there's correction in equity markets, especially when tech stocks fall. As equity markets are trading well above pre-pandemic levels, even though key economic metrics are below pandemic levels, we are expecting a correction in equity markets in the near term. So those were my 5 points. And what I want to end my small presentation is by showing the valuations in the space. You can see here the key valuation multiples of gold producers, EV, enterprise value to revenue, and enterprise value to EBITDA. You can see here that the current levels are significantly lower than last year, same time levels. And we believe that with our positive bullish outlook on gold, we believe that larger players will be actively seeking to acquire high quality advanced stage gold assets. Now with that, I would like to welcome Marshall Koval, the CEO of Lumina. Marshall, you'll be able to share your screen in a second. Please go ahead when you're ready.
Sid, thanks a lot for having us today. I want to go ahead and talk about Lumina Gold. The only asset in Lumina Gold is our Cangrejos project in Ecuador. It's the largest primary gold deposit in Ecuador. I'm going to go ahead and run through a quick presentation here. We've got a forward-looking statement. You're all familiar with that. And then just give you a little bit of history of the Lumina Group and our track record. The group was founded in 2003 by Ross Beaty, primarily in the copper space. We raised 275 million and returned 1.6 billion US to shareholders over these tombstones that you see on this slide. Currently, Lumina Gold, Luminex, and Strategic Resources are the three companies that management is running. And let me walk you through our Cangrejos project. Like I mentioned, it's the largest primary gold deposit in Ecuador. It's a top 25 gold development projects in the world. We have indicated resources of 10.4 million ounces of gold and 1.4 billion pounds of copper, and an additional 6 million ounces and 0.8 billion pounds of copper in inferred. A large production profile based on the 2020 PEA that we did, 366,000 gold ounces per year of production over a 25-year mine life. Low AISC net of copper cost of $604 an ounce, and robust economics at an NPV of 5% discount rate at $1,400 gave us a 1.6 billion NPV US. A lot of leverage on the upside. The 20% upside case gave us a 2.5 billion NPV. And Ecuador is an emerging jurisdiction with excellent future going forward for both gold and copper deposits. Let's just real quickly look at the corporate overview. Ross Beaty controls 19.8% of the company, management and the board, another 9.9%. Market cap today, where we're trading at 66 cents a share, is about 220 million Canadian. And then we have a Ecuadorian entrepreneurial group with 18% and Route 1 out of San Francisco, a diversified investment fund with 6.3%. Ecuador's really advanced since we went into the country in 2014. You can kind of see all the major players here. The copper players are in a bit thicker than the traditional gold players like Newcrest and Franco, Dundee, Wheaton Precious Metals, but I think that's evolving. The investment outlook with President Lasso, the new president, is real positive in the country. So let's just flip over to our Cangrejos project and do a quick overview. I mean, Cangrejos is close to the coast, Puerto Bolivar. It's about 40 kilometers. That's where Mirador is shipping its concentrates from. Cangrejos is a gold copper concentrate producer, 40,000 tons per day initially, expanding to 80. We've got power, port, road, water, a good low elevation at 1,300 meters. All those things are favorable for the project going forward. Low power cost in the country, low transportation cost to the port, and low diesel prices help the project economics at a PEA level. No communities directly on the site, good community relations. You know, we get a lot of questions about Cangrejos. You know, does it have scale? Yeah, it's the 37th largest primary gold asset in the world, 12th largest undeveloped gold deposit by a gold production capacity. It's akin to a large porphyry copper type deposit. It is a gold copper porphyry, about 80% of the revenues from gold, 20% from copper. Its capex, it's about $1 billion build. Both Fruta del Norte and Mirador have been built in that sort of cost range in the country in recent years. And parts of the project are advanced to PFS, but we've just announced that we're moving the entire project to a PFS, looking at a $26 million Canadian financing to advance the project. That'll allow us to get an investment protection agreement with the government and get the project down the permitting pathway. There's still upside potential. Part of the PFS will do some step-out drilling on the Gran Bestia deposit on the upper left here, where it's open, and at Cangrejos as well. So this is a cross-section through it. You have Gran Bestia on the left. We stopped drilling at the ridge above Gran Bestia, and the mineralization continues to the left where it says untested on this slide. And the deposit on the right is the Cangrejos deposit, which is mostly drilled to indicated, which will support the pre-feasibility study probable reserves once the economics are positive for the PFS. Just to give you an idea, I mentioned initially 40,000 ton per day expanding to 80. That's $1 billion US initially, with about 454 expansion capital to get it to 80,000 tons per day. If you look at the up case that I mentioned earlier at 20% up from the $1,400 gold case, you get a IRR of 21.7% and an MPV at 5% discount rate of 2,500 or 2.5 billion. Sorry. Where does this? It's a unique project. There's only 28 active primary gold deposits that can produce over 250,000 ounces of gold a year. Cangrejos is the 5th largest primary gold development project controlled by an independent. Those are all the gold boxes here, plus Cangrejos in green. The rest are controlled by majors. And this just gives you some benchmarking of comparable open pit milling projects coming online. You can kind of see these are all large projects. You can see that both from an initial capital and IRR and MPV, that Cangrejos stacks up well with several of these projects. I'm on the board of Equinox Gold. They were building the Greenstone project. That's on here as well. But all in all, basically Cangrejos is the next generation gold project, gold and copper. Just to give you an idea of PNAV valuations, we see the Western developers are trading at a PNAV ratio of 0.41. And you can see the Ecuador gold developers are still trading, lagging behind that. And specifically Lumina Gold and our other company, Luminex, present really good investment opportunities because we're trading well below where we should be, with 17 million ounces of gold and 2 billion pounds of copper in our inventories. I guess the best way to show the value disconnect is since we started our first resource in January 2017 till today, we've seen the gold price go up 50%. We've seen our stock go up 10%, 10%. And what we've seen at the same time is the gold price, the resource growth of 400%. So we think there's a big value disconnect, and it's a good opportunity to take a hard look at the company. Just in summary here, since 2018, we showed a large-scale profitable project at $1,300 gold. We drilled 40,000 meters, doubled the size of the project, improved the metallurgy, enhanced the project engineering, and the 2020 PEA, as I mentioned earlier, shows 1.6 billion MPV at $1,400, and at today's commodity prices, over 3 billion MPV, with a long mine life gone from 16 years versus 25 years. And the company's had a long track record of successfully monetizing large assets, like I showed you with the Lumina Copper story. So the strategy here is to add value, de-risk, and move the project on to somebody that would build it. So Sid, with that, I think I'm done. So I'd be open to any questions.
Thank you, Marshall. I just want to add that Barrick CEO recently mentioned that how they evaluate gold projects is they use a long-term price of $1,200 an ounce. And I want to mention that Lumina, one of the things that we like is that its economics are extremely robust. Even at $11.20 gold and $2.2 copper, the project has a after-tax NPV at 5% of 450 million. The market cap is still below these levels. So again, thank you so much, Marshall. We can now open the call to a Q&A. Listeners, if you have any questions, please feel free to type them in, or you can click on the raise hand option and I can unmute you. So Marshall, while we wait for the questions, I have a bunch of questions that I have been thinking to ask you. So I'll start with that. You mentioned you are a director of Equinox, which is a mid-tier gold producers. Are large projects under the radar of senior producers, mid-tier producers? Large projects.
Well, I think all the corporate development groups in the mid-tiers and the majors are looking at everything that's available out there. There are not a lot of projects, like I pointed out in the presentation, that can produce more than 250,000 ounces a year. I'm talking development projects here. So I think projects like Cangrejos and others, I referred to the acquisition of Premier and our Hard Rock deposit. we also spun out assets into I-80. So I think there's a lot of creative, deal making going on in the space right now. And I think, projects like Cangrejos and other large scale ones in developers' hands are on the watch list of all the major and mid-tier companies.
It's interesting too. Historically, these gold senior guys, they make acquisitions when gold prices are historically high, instead of using a contrarian approach where most seniors or mid-tier producers become more active when prices tend to be high. Now, most of these seniors have a lot of undeveloped assets in their portfolio. Why would they look at expanding and adding more undeveloped juniors?
Well, yeah, that's a really good question. I think fundamentally, all these majors and mid-tiers are dealing with reserve replacement issues. I think when you're seeing gold into the pricing that we have currently, with Equinox, last quarter, I think we achieved like $1,800 gold as an average revenue price on gold. You're seeing a lot of mine plans move forward to take advantage of this. Reserve replacement continues to be an issue. And you need projects that have a long mine life that can survive multiple cycles in the sector. So I think even though there are development pipeline projects and brownfields projects in the majors and the mid-tiers, I think they have to continue to build that pipeline of development projects for a growth profile for reserve replacement. And I think if you look at the case of Ecuador, it's sort of an emerging market where everything's going in the right direction for discovery, development, and the future of that country, which has been largely left behind compared to Peru, Chile, and other Latin American jurisdictions.
Yeah, so that's a good segue into how do you compare Ecuador versus other Latin American countries? Why do you think the multiples that market assigns to Ecuador gold projects are lower, and when will this change?
So I think what you have is a bit of, show me and prove that Ecuador is heading on the path that it is. The new government is really trying hard, Lasso government, to do that. They've met with the mining chamber a couple times. So, I mean, in the past, it's had a leftist populist government for quite a few years, and it's a bit of show me that things will get better in the future. But on the same time, on the other hand, you've got Peru, which has moved to a leftist Marxist type government that's talked about nationalization. They've kind of backed off of that now. They're talking about higher taxes and higher take to the government. And meanwhile, down in Chile, you've got a leftist sort of populist government that's proposing additional royalties. So when you look at the region, Ecuador is starting to have a bit of a bright light shined on it. And I think eventually that PNAV discount for Ecuador developers and operators will tend to diminish over time and come more into line with Western producers.
Are you seeing more interest from seniors in Ecuador?
Yeah, I think you're seeing pretty much all the copper players are in there. In our Luminex company, which has gold and copper assets, we have JVs with BHP, earn-in deals, and Anglo American. And so the copper guys have come in there stronger, but we're starting to see the gold companies come in and spend a bit of time. The recent deal where Dundee purchased the balance of INV is a good indicator of the gold companies coming into the future.
Okay. Now we see when you look at past or recent M&A transactions, lower capex, higher margin, potentially higher margin, undeveloped projects tend to be more attractive. Maybe it's just cheaper to buy them and it's cash flowing quickly, even though they have a lower expected mine life. How do you position Lumina, especially considering the size of the deposit, the capex, even though it's lower than comparables, but how do you position, how long does an M&A typically take? What do the seniors want to see? Do they want to see a feasibility study or a PFS is enough?
It's kind of interesting. If I look at the case of, the copper space and the history of Lumina Copper, I joined Ross Beaty in 2004. and was involved in all those companies. I was the CEO of Northern Proof Copper. You know, we went through a PFS and then we were taken out at that point. And then I was involved in the Relincio deposit that we were working on a PEA. We hadn't completed it. We'd done a lot of technical work and tech took us out. So, you know, that can happen anywhere in the cycle. I think really, if you're looking at something like Cangrejos, I think most of the gold producers, that majors, mid-tiers, and foreign companies that might be state-owned, that sort of thing, they would look at it sort of between the PEA and PFS level. And, you know, normally a major company is going to want to do their own engineering. They're going to have their own operating preferences. So I think you don't really want to go much beyond a PFS if you're looking to exit and not build the project yourself. But you know, that would be my broad general comment.
Okay. Now, the recent financing you announced, 26 million, will that take you through the PFS, and how long will it last?
Yeah, that's the intent, is to get us through the PFS, do a lot of the field work. The study itself is roughly about 13 million US plus or minus. About half of that is going into the ground to take the resource to indicated within the mine plan that we presented in the 2020 PEA. And that'd take about 15 months to complete all the field work and engineering, you know, once we initiate the drilling there.
What are you expecting from the PFS? Similar to the PEA, obviously inflation kicking in, OpEx might have gone up. Any guidance, any insights?
Yeah, I mean, all the companies are kind of dealing with it right now. And I think one of the things you have as an operator, and if you're in the process of building a project right now, you've got the short-term inflation. I think a project like Cangrejos, we tend to have to look at it in a longer-term scenario and try to do our best to project where longer-term prices are. But more than likely, you'll see some increase in initial capital and capital aspects, but you also, at the same time, you're going to be trying to optimize the project. Like, for instance, between the 2018 PEA we did and the 2020, we went in and did studies to use a SAG mill instead of or high pressure grinding roll instead of a SAG mill, and that reduced energy costs. You know, so you're going to be looking at optimizing cost, and also you're going to see some costs move around, and you'll try your best to control those as you move through the process.
While maintaining the production, yearly production, I think.
Yeah, that's the idea.
Okay. And sorry, you said the PFS is expected later next year, or how long?
Yeah, I mean, well, basically 15 months. So we close the financing, and then it take us, you know, roughly a month to get everything up and going in the field, and then 15 months from there. So yeah.
How long typically, ideally, let's say the financing, funding everything is in place. How long, let's say you push the button today, how many years will a project like this take to go into production?
You know, once you get through the PFS and you have that in hand, you're sort of, you have to move to a feasibility study. That's probably another 18 months. And then, you know, some detailed engineering and through your permitting. So you're probably 4 or 5 years out, best case.
Okay. And one more thing is from now to the end of the completion of PFS, what kind of catalysts can investors look for? Key press releases or anything that you're expecting in the next 12 months?
Yeah, so, you know, I showed the cross section on the Grand Bestia deposit. We still have some step out drilling to do there to further define mineralization. We stopped at top of a ridge, and we know that the breccia zones and the porphyry continue on the other side of the ridge. That's important because that'll help reduce the stripping ratio, and I'm assuming that we'll be able to bring in additional resources into the resource estimate, both gold and copper. So, you know, that's one of the key things for potential upside.
Okay, I don't see any more questions. Do you have any closing thoughts, Marshall?
Well, I would just encourage everybody to take a hard look at us. I mean, you don't see that many projects of this scale. We're seeing Ecuador becoming a more mining-friendly country. And, this is the type of asset that'll survive through multiple cycles in the gold business. And it's got byproduct copper, which is pretty attractive to quite a few companies. So you get your foot in the gold side and the copper side with Cangrejos.
Okay, thank you so much, Marshall, and everyone on the call today for taking time. A recording will be uploaded on our YouTube channel shortly. Please ensure you subscribe to our YouTube channel and also sign up to be a member of a platform, researchfrc.com. You'll get alerts when we publish new reports. And of course, you'll be able to see a list of our top picks. Lumina Gold is also one of our top picks. Thanks again and wish you all the best and stay safe.